All right, y'all. So we're gonna get started with this $500 a day masterclass, and we're gonna start off with just learning the basics. So with the basics, everything that's with Forex, the basics of it is built upon, or the foundation is structure. If you understand structure, technically you don't need anything else. However, confluences will help to make you a better trader, because you don't want to trade just based off structure. And the reason why, although you can be very profitable, you want to trade things with, for lack of a better word, you want to trade things that happen over and over again. And structure will show you things that happen over and over again, because if you understand what structure did in the past always repeats itself. It just does it in different ways. So when I say that you can trade just based off structure, but you want to understand other things, you want to understand or add confluences, because it will help you to make better entries, because you're not just trading off structure. You'll have more than one confirmation. And I would suggest maybe 3 confirmations. We'll go over it later on. But like I said, with this just being the foundation, I'm just gonna pick a pair. I think I'm gonna start with EU. We'll look at different pairs today. So and understanding structure. So
You said confluence. What is a what? I mean, jump in. What, like, is there a definition for confluence? Or is it
okay, so confluence is basically you using more than one thing to confirm what you see. So it's confirmations. I guess that's a better word.
okay.
Does that make sense?
Yeah, that makes sense. Confirmation.
Okay. So yeah, like I said, you could trade just based off structure, but you want to use confluences because it'll make you a better trader, because you're not just trading off one thing you'll see. You have at least maybe 3 confirmations, which is telling you that that trade is better. And we're not going to trade just off probability, which a lot of people do. We're going to use facts, meaning things that happened in the past. As you know, or as I just said, the past always repeats itself. So when we see certain things in the market, we're going to be disciplined what we trade. Once I later on teach you certain things, you're only going to trade that, because that, in a sense, those setups that I show you, those are factual trades, meaning it's a fact that once this happened, once A happens, B happens, right? Kind of like 1 plus 2 equals 3. If you change it to 2 plus 1, it still equals 3. The only difference in the trading world, 1 plus 2 may equal 3, but how 3 shows up may look differently to our eyes. And that's the only thing different when we understand the trading, right? So, and then, like I said, the goal is to be profitable. I'm saying $500 a day, but in the trading world, $500 a day really isn't a lot. You can make a whole lot more, but if you make less than $500, like I was saying, if you I think to you all at one time before, if you make $100 a day, that's, and you trade it, let's say even 3 days, that's still $300 if you're profitable in those 3 days out of, let's say, 5 days. That's $300. That's 3, 6, 9, 12. That's $1,200 in a month. That's a part-time job. And trading is not meant to be on a computer all day long. It's meant to, for you to kind of like, the goal is for us to set it and forget it, because we don't want to be like most traders, and like I was for a period of time, like attached to your computer, like your eyes glued on your computer. You want to trade, or you, most people learn to trade for the freedom. They want the money, yes, but they want to have freedom to go and come as they please. If you're attached to the computer and you can't go nowhere attached to the phone, that's not really freedom. So, and in addition to that, you can be a profitable loser, meaning you can lose and still profit if your wins, or the wins outweigh your losses in terms of money management. But that's a whole nother situation we're going to talk about later too. So let me bring this over. The basis of structure, right? The market moves like this. Up. Let me lock this. It moves up, back, up, back, up, back, up, and so forth. This is a buyer's market, the way this is moving, right? You can kind of see it moving in a upward direction. This is a bull market, another word for it, right? Then the market also moves in a bearish market, moves down, back, down, back, down, back, down, back, down. Same thing, just the opposite. I meant to do an arrow right there. It's just the opposite of the other side, right? So this is bullish or bull. This is bearish or bear. This is selling. This is buying. So the goal is you'll hear people say it different ways. You'll hear them saying this upward movement right here is expansion, and this back is a retracement or a flag, because it kind of looks like a flag. And they'll say, you know, expansion again or continuation. It's the same thing with this downside. This downside momentum is an expansion. You'll have a pullback or a flag or whatever they want to call it, and then another expansion, or they also use the term continuation. It means all of it is the same thing. So a continuation and an expansion is basically the same thing. A flag, a retracement, all of that is basically the same thing. It just, the wording is different, but it means the same. Now, we as traders, we're going to buy on or sell, whether we're buying or selling. We are going to do it on the flags or the retracement. So right here would be where we're looking to do that in this upward movement. We're looking to buy at the very bottom. Right here on the way down, you're looking to do the top. So it's the opposite. All right. So y'all with me so far?
You said at
Yes.
the top, that's for the sale, right?
Yep. Let me write it in. You want to take a picture or anything like that. So sale, we buy from the top. Buys, we do it from the bottom. That's essentially where the market moves. The market's going to move up, down, up, or down, up, down. That's a buy and a sell. Now, in some cases, you'll see this, right? We see this is the basic buying up, this is the basic buying down. Of course, it's never that clear when you're looking at it on the charts, but the more you look at the charts, the more your eyes get fine-tuned to this whole movement patterns, right? So the other way, I'm going to add, all right, you'll see this sideways action, and then you might see it go up again, right? Or you might see this sideways action and going down. Now, the difference with this sideways action is, let me move this buy up. I know it's not that pretty, but you all get the point I'm trying to make. I was looking for this all the time. We were right over here. Okay. The difference with the sideways action is called consolidation or accumulation. I use the terms interchangeably. Some people use it a different way, but I use the term interchangeably because it's basically the same thing. But depending on how you see it, people will use it differently, like I said. So this whole sideways action, this is the same thing basically as this long pullback right here, the whole flag. So essentially this flag or this retracement is sideways, right? When you see it, it'll just, price will be up and down in this particular area between two ranging points of a higher and a high and a low spot on the chart. They'll just be going down like ping pong back and forth. Same thing with sale. It'll be going down back and forth before it drops. Now on this particular way, when it's going sideways, on a higher time frame, this will be a entry. This whole little area of going back and forth, this will be one of our wick entries that we're going to concentrate on a later time. But this will be like a wick entry. Same thing right here. On a higher time frame, this will be a wick entry, right? And when I say a wick entry is, let me bring the charts over. A wick is basically all of this right here you see wicking up. Make my chart a little bigger. These little lines right here, all of these outside of the candles, my gold candles are buying, my black candles are selling, but outside of these lines on both sides, those are wick. That same area that we just talked about, the consolidation, those are wick entries on another time frame. And you'll learn how to get those as well. Okay, here we go. So that is the basis of how we're looking as far as the basis of what we have to understand in the market, the way the market's moving. Now, if you can see on this side, it's almost like you're walking up, right? Mm-hmm. On the downside, it's like you going down, a slope down. That's the main difference. One of the other things I want to say, in order for this market to move like this, which is going up in expansion, we want to follow the banks, right? Because the banks is what move the market. And the banks are like your hedge funds and things like that, like your larger, well-known banks. We as individuals, we don't make enough money to move the market. Like even if you're making $1 million, this is over a $5 trillion per a day market. So the money that we're doing is not doing anything as a collective individual, right? But at the same time, although we personally, one person is not doing nothing, as a collective, we are kind of like at the bottom of the totem pole, meaning the larger banks, they use the money that we put into the market to for their profit. We a lot of the times get faked out by what they do. So my goal here for you all with this $500 a day masterclass, you don't become the typical retail trader that the bank uses to collect their money for their profit. You become a sniper trader and you ride the bank coattails. Because if you ride the bank coattails, when they take people out, meaning they take other people's money, the regular retail traders' money, you're just going to ride the coattails. So their losses will be your benefit. Because in this market, when you're buying to sell and selling to buy, you essentially are trading orders or getting orders from somebody else, right? If you bought, you had to exchange those orders or get those orders for somebody else. If you sold, you had to exchange those orders and get those orders for somebody else, because the Forex market operates based off orders. So it's kind of an exchange. So the way we profit is we profit, like I said, we ride the bank's coattails. They're not going to take their stuff out. At least the most they'll do is mitigate their orders. And basically what that means when I say mitigate their orders, it means if they made bad sales, sell the profit, and then come back to break even or a smidget past break even to that's mitigating their orders before they go into profit. So they'll go negative to trick everybody else, the regular retail traders, before they go to positive. And when they go to positive, they mitigate their orders. That's when you see a lot of times those large spikes in the market, like of candles moving in one direction, right? And they call them impulses. That's the same thing as an expansion. You see, you can see it right here. This is 4-hour time frame, but on the lower time frame, it probably look a little different, but it's still an impulse. That's impulses are basically them dumping money into the markets, right? So as they, like I said, as they dump money into the markets, we want our entries to be regular retail trader stop losses, because when they're getting stopped out, we're not even entered their trade until they're getting stopped out. So that way, when the orders are being mitigated or coming to break even, we're basically just riding that wave to the profit point. We skip the negativity of, or negativity may not be the best word, but we skip the part of just taking the money. We're just along the ride for the profit. And we might not ride it the whole way they ride it. We just want to ride it to a certain area, right? I am a day trader. I don't really hold my trades, right? I'm a scalper, but I try to stay in the trade. I like my money daily. I'm not a monthly holder, yearly holder, weekly holder, right? So my goal is to, the only way I can teach you is what I know. I can't teach you how to be this long holder person that holds your trade if that's what you wish to be. I can show you how to do it, and from there you can build upon and hold your trades, because that's a mental mindset. You trade based off your personality, and you'll learn a lot about yourself based on how you trade, right? The reason why I trade my favorite pairs are US 30 and German 30 is because I don't have to be in a regular Forex pair all day long or for a month or so, but I can still make good money for like, and being in that pair for like a day or a couple of hours. So let's go to the chart. Y'all have any questions about the drawing and stuff before I move forward?
No, good.
No.
Okay, so we're gonna just go with German 30. So when we trade, we do top down analysis, meaning we start from the top and go down to the bottom. Now, I'm not necessarily gonna do that right now, because all I want to focus on at this point in time right now is the structure of everything. So basically what I said, oh, and let me go back and say this, right? I neglected to say this with this drawing. Now I mentioned you make on the buys, you make higher, you go higher, and on the sales, you go lower. Now, the kicker to all this going higher and lower is you buys make higher highs and higher lows. Sales make lower lows and lower highs. So I'm going to write this out really quick for y'all. So you start at the bottom per se. I can take this light off. Yellow off, I think. This is a low. If this is where you really seeing the market go, this is higher. This peak right here is higher than this low. So now you have a high. Now, when it comes back to your retracement or your flag, it pulls back. You should expect 50% or higher in your pullback. So 50% of this move from this top to this bottom price should usually pull 50%. It won't happen all the time, but a lot of the time it will happen. And that's how we're going to like to verify a lot of our trades by that 50%, because it gives us extra confirmation, or a confluence per se. It'll help in your confluence. If you keep that in the back of your mind, price should always come at minimum 50%, between 50 and 80%, right? If it comes 10%, is not necessarily a real pullback or retracement like we want to see here, well defined. So right here, where we would enter, this is a higher low. The reason why this is a higher low, because this low right here, this is higher, and this high between this high right here. So we have a higher low, right? And then the next step, we have a higher high. Because that is higher. Now, keep in mind, when you have these higher highs and higher lows, in order for you to go higher, if this is your expansion, right, you have to see there needs to be a break right here. So in order for, when you're right here, you have this low, you have this high, you have this higher low, but to create a higher high, price has to break your previous high, which is this high right here. When price break this previous high and it starts retracing, we then confirm that this is probably our higher high and our higher low. That's how we confirm our higher highs and higher lows. So I'm just going to copy this right quick so you can see it on both sides. Okay. Let's see if I can. Just gonna clone it. Guess I can clone it right now. Put my text here. So all the way up, even when you have the consolidation area, you'll have a higher high and higher low. It'll just be within this area. So the top, somewhere at the top, you'll have your highest point, and somewhere you will have your lowest point. So they'll kind of be like in close proximity, possibly, to one another. I'm gonna just do some lows because I'm pretty sure you all get the point by now. So each, where we're buying on this buy side, oh now I want to clone. All right, where we're buying on this side, we're always buying at our higher lows if you're looking to buy. That's where we want to enter always, at a higher low. We're not entering at a higher high. And the reason why we're not, because if we enter for a buy here, what happens here? It comes back and retraces. So it'll be, if we know it's going to come back, why would we enter right here? Because that means if we enter right here, right? Yeah, it comes, and when it comes down right here, this is all negative. This is us losing money. So that's why we don't enter at the top. We want to enter at the bottom, because if you enter at the bottom, when it does come back, it's not necessarily going to come back to your entry. And that's why we enter at the bottom and not the top. I'm gonna do it up to here so you can see it on that side. So like I said, you'll have, in this area, you'll have your higher high and your higher low right in this same area. And on this side, same thing. We're buying, or excuse me, we're selling from the top. We want to sell from the peaks. So we're selling from the peaks and we're buying from the valleys, I guess the lows, right? And you start off right here. This would be a necessarily a high. I really wish my clone thing would work. Okay, here we go. That saves so much time. And this over here, the peaks are the lower highs. And the same thing, like I said, the same thing. Once you, in order for you to get a lower low, you have to break past the previous low. If it does not break past the previous low, it's not a lower low. So essentially, when your price, when you have your lows, once it's dropping, you get a lower low, lower high, or maybe it's just, so I don't confuse you all, I'll just leave that to at a low. Once you get this lower high and it's retraced at least 50%, meaning you have this flag covering at least 50%, in order for this to be a lower low, price has to surpass this previous low. If price is in between here, this low and this high, basically it's consolidating, right? So it can be this situation right here could be happening. But in terms of consolidation, it may be like choppy, meaning it's just all over the place. And basically it is taking people money on both sides. So all that means is until it breaks either your low or your high, you're waiting to confirm that what the market is going to do. All right, so let's go back over to this side, and let's look at it on the charts. So we're just gonna start right here. I'm gonna just go and look from this left right here. So we start right here at this is a low. So I'm gonna go ahead and put this right here. Start with a low. Price is at a low, right? From this low, you see price kind of going up, right? Yeah. But what do we see right here? This is the consolidation on what I was telling you about. So we did not get a full 50% retracement, meaning we didn't get that flag. Because when I showed it to you, I said price will come like this, and a lot of times come 50% before it starts going. We didn't get that. We got this sideways action. So in the sideways action, you will have a low and a high. A lot of times you won't realize you're in the sideways action until you really get comfortable with it, which is the consolidation. You have to, because right here, you won't know you're in consolidation. Right here, you might not even know, but once it starts playing out a little bit more and you see price has not gone past here, nor has it really gone past here, that notifies you, oh, I'm in consolidation. But again, that takes practice. So in this consolidation, our high, I'm using this yellow candle as my high, right? And I'm going to use this sell candle down here as my low. Well, technically, you could have used this candle here because of the wick. I'll use that one as the low because of the wick. And so now we have, excuse me, a higher low. I said it backwards. I put a lower high. Make sure I ain't say it backwards over here. Okay. Yeah, I ain't say it backwards over here. All right. So we have our low, our high, our higher low right under here. And then once price surpasses our high, which is this yellow candle right here, when price surpasses it, this is a buy candle. Now we're officially looking that we have another high, right? But we can't really claim this high until we have a 50% retracement or we realize we're in consolidation. For this one, we got side momentum for the consolidation. This is another consolidation area. So you have your high and your low. A lot of people will tell you to stay away from the consolidation, but you don't have to. If you know what you're doing, you don't have to be stay away, because as I mentioned, your consolidation, those are wick entries on higher time frames, right? That's all it is. When I started getting those real good wick entries, I used to get nervous because I'm like, oh my goodness, that was this consolidating, until I realized that's all consolidation was on the higher time frame, right? One of the other things you want to keep in mind when we're looking at these higher highs and higher lows, or if it's the flip and you're looking at a sale, when price retraces or it flags, right? Whatever your highest point is, in this case, it's this gold one right here, right? In this case, we're using this one as our highest point. You really want to see minimum 2 candles or a candle that close below it. I like to see 2. You want to see a candle close below it. So right here, I'm going to show you this example. This confirms my flag. So this is the low of the body. So we have the 2 on the sides, on both ends, that's the wicks. But the actual body of the candle, I need to see at least 1 close below. Like I said, 1 to 2. 2 makes it better, but at least 1 close below. And we have candles closing below it. If this is my high up here, or even if you use this one right here, this is my high, I have to see candles closing below it. But I utilize this as my high. In this situation, I see is the wick, right? This wick is higher, but the body of this is higher, right? So the reason why in this situation, I use this body, because, and on this situation, I use the wick. It's just a personal preference with experience. But for what you all do to be consistent across the board, I'm going to suggest you use the body, right? Use the body as your high, but pay attention to the wick, because although you're using the body, the wick will tell you that price is whether it's continuing to go up or down. Meaning the wick will show you right here. The wick will show you that price still wants to go up. And we'll talk about that later on. But in this situation, I definitely would have used the body, but you would have been fine with just the wick too. It really doesn't matter. It's a personal preference. Typically, like I said, I use the body or the wick based off my experience, but to make this a concrete, no questions asked, I'm gonna say use the body, but pay attention to the wick. And when I say pay attention to the wick, you want to know where the wick closed at, whether how far it closed up or how far it closed down. Any questions about that?
Could you write that out?
What'd you say?
Could you like write that out when you said it closes? You get a little.
Oh, write it out. Okay, hold on.
Little.
That's all it is. For retracements or flags, use the body to indicate the high low points, meaning we're utilizing the body for the retracement. But we're using this body because this is the highest body because we're going up. So we're looking at the gold candles. My gold candles are back candles. So out of all the bodies of all these candles, this is the one I'm looking at because this is in this whole area right here. This is the tallest one before it starts to go up. If I look at this area right here, this is the tallest back candle. It just so happened not only is the tallest back candle, it's the one with the highest wick to the high. So this is the candle I'm using right here. Does that make sense? Or is it a little clearer now? Was that better? That explanation?
Yeah.
Okay. So I know you may be wondering why I skipped over these two candles, these black candles. The reason why I skipped over these for my highs and my lows. Now, granted, this is not 50% right here. Because remember, like I just explained, I wanted to come back 50%. But even if I look at what I just explained with my highs and my lows, if this is my highest point right here, right, on a lower time frame, this is an actual, a bigger pullback on a bigger flag. But on this time frame, this one candle alone, this is not a pullback or a flag because it's only one candle. I need to see multiple candles. So, and this one has two candles, right? But the problem with this two candles, they don't close below this candle. It doesn't close below here. So to give you some more concrete rules, let me see. Let's say. All right, so for the buy, we have to have two candles close below the highest point. And from the lowest point, you can't make a new high in that candle or the next. Meaning, if this is the lowest point right here, this is the lowest point. And this lowest point, this one candle can't be a high, or this right here can't be a high, the one next to it. It has to be at least 3 candles to make the new high. For sale, above, is it the lowest point? I didn't mean to put all that out there. All right, so in this situation, we're buying up. Like I said, 2 candles have to close below the high. Right here, you have this candle and this candle close below this from the high, which is this one right here. Because buy candles open from the bottom and close at the top. Sell candles are the opposite, right? They do the exact opposite. So they're open from the top and close at the bottom. Let's see if I can find you a sell retracement. So in terms of where this side is selling right here, if this is the low candle right here, this sell candle, I have to have 2 candles, which I do, that close above it. And then with those 2 candles that close above it, the highest candle, which is technically this one right here, the highest candle can't make a low in that candle or the next. I think I've said that wrong. Let me see. 2 candles close above the lowest point. Yeah, I said that right. And from the highest point, can't make a new low. My wording was off. Okay. Right. So going back to, then we have this going back to the buys, right? And I know this is intricate, but you got to be able to like see this. This will help you make your $500 a day. This is the foundation of that $500 a day. Just seeing this is what we need to practice on. So right here, we have a new high. A high is made, but we have to confirm that high with at least 2 candles closing below. If this is the high, we don't even have 2 candles closing below, right? But this is consolidation on another time frame, right? I wouldn't necessarily count this on this time frame because of how it looks. I want to see more sideways momentum. Right here, we have sideways momentum, but it starts taking off. So I'm not really looking at a new high until I get here. For me, this is what I'm going to consider my new high right here, my higher high. Right. That's me personally. Now, like I said, some people will look and they will say this is their high, this is their retracement of their high, and then they got another higher high, higher low, higher high. I'm just going to group this all together. And again, the reason why I'm grouping it all together is because I'm not counting this candle right here as a pullback. On a lower time frame, I know it is this area is consolidation on the lower time frame. However, the reason why I'm not counting it is because of this area right here, right? Because this area is still expanding upward. So I'm just including this is, if this is one big expansion, this whole thing right here. Where's my drawing to? I'm including this whole thing as one big expansion. This whole thing right here. All of this is going up for me. So once I get this higher high, of course, we're expecting a higher low, right? So we could say if we don't know what's going to the right, let's pretend we don't know, this would be our higher low. All right, let me see. This will be our higher low right here. Right? So we're looking at this as an expansion right here. And the reason why we can count that as a higher low is not 50%. Like I said, it's not going to happen all the time, that 50%, but we do want to see it a lot of the time. But the reason why we count that is once you see, you don't see this right here to the right. Let me put a line. We don't know any of this has happened to the right. So because we don't know initially, what we see is this right. We see it like that. So when you see it like that, it looks like that's your higher low, right? But it didn't come to your 50%, right? So as price still starts to moving, this becomes this. Which is your consolidation. Do you all see that, how that turned around? It went from this, and you only seeing part of it, to this right here. It looks like it's a retracement right in here. And then it turns around and gives you this. So while you're in it, until you really learn how to do this, like I said, you got to get your eyes ready for to see this as it starts to play out. But right here, right, when price comes down right here, although this is this, we have a or you will have, when you see this price breaks below this area right here, on a lower time frame, you're going to eventually learn that this is a break of structure, and a break of structure basically means that price may be changing. So price goes up for with the higher highs, higher lows, or the down, lower lows, lower highs. It should always go up or always come down. Once it breaks past, in this case, if it breaks past your low because you're going up, price is going to do it for two reasons. It's either going to do it because price is altogether turning around to start going lower, or the banks are taking liquidity, like I mentioned earlier, or liquidity is just money. There's money down here, so they're taking people out, the retail traders. So this is where I say our entry is going to be their stop losses getting hit. Our entries will be their stops getting activated, which take them in the wrong direction. Our entries will be their limits getting activated and taking them in the wrong direction. So just keep that in mind. So this will give you indication, because it's going lower, that price may start to drop down. So we're just watching this area, because essentially this is the last low that I'm confirming. This was the real pullback. But of course, this is a 4 hour. So we're not going to wait all the way to here on this time frame to see what's going to happen. We're going to get what's in between here and here till we get here. So I'm gonna take this off. This is essentially a whole area of consolidation, like I was just saying, for a higher time frame, for entry, for a higher time frame, for a sale. Right, this is a sale entry right here. If you are buying up, this was your take profit. Once this started happening, if you're looking to sell or to short, people call sell short. If you're looking to short, this right here would have been your entry in here. And you could have entered it several ways. I'm not gonna get into it right now, but you could have entered it several ways, but essentially this area would have been your entry. Now, as price goes down, I'm just gonna talk about a little bit. We have our low right here. We can consider this, right, a low, because this low is lower than this. I understand we're in consolidation, but it's still a low. We don't get a higher high, we just get a high. And then once it comes down here, right here, we're really starting to get inside of this consolidation. Once we're realizing we're in the consolidation, now we have a low or a lower low. Once we go from this lower low, we go to a lower high. And this right here, you can count this as a lower low technically, because it surpassed this low, right? The body, but we're not going to count this as a low. And the reason why is because although it surpasses the body, in this situation, it does not surpass the wicks. So when we actually have our lows and our highs, we want it to surpass the wicks, right? So this is just basically an area of consolidation, right? That played out to the side. You might not have seen it initially, but it's still like a sideways. Like I said, the same thing happens, it just looks different. So we got our lower low and our lower high in this consolidation to finally get another lower low. Right. And now we're looking to get a lower high. But as price moves, right, on a lower time frame, we have some consolidation right here, but on a lower time frame, we have structure breaking, right? Because our lower low, lower high, we have it going up now. And right here, it has broken above officially right here. But we didn't count this, right? Because we don't have two candles closing above this. So on the lower time frame, you found an entry for you could be buying up. But for how we're trading, we're not looking to enter if we're staying based off this time frame. Of course, we're going to enter on the lower time frames because we're using the monthly, weekly, and daily. I neglected to say that the monthly, weekly, and daily are for us to give us a bird's eye view. Our 4 hour and our 1 hour we're going to look at to get a little bit more intimate in our view. And then our 15 minutes are and below are where we're looking to snipe the markets to get those wick entries, right? So from here, we want to see price come back into this area. And I would look to the lower time frame for this entry, but I'm not going to go over entries right now because we're just talking about structure. Like I said, structure is the main foundation. Let's go look at another pair, EU. EU is a pair that I know I've suggested several times as a good pair for people who are new to trading or not confident in trading. You can make money off of EU too as well. So even if I start right here, I'm trying to start with the more cleaner setups because they're easier to see. We start right here. We have this high, right? We get this side area. So we get in this high, we kind of get we get a low, we get a high, and then we drop for another low. And then we get a high or a lower high, and then you get a lower low, lower high, lower low, lower high. Well, actually, this is not a lower low, excuse me. This is the next lower low, right? Because you got to follow the rules. This is the lower low, then you get your high, and then it continues to drop. So now, do y'all have any questions so far? Yes, no, maybe so.
No.
All right, so I'm gonna end this video right here, but I'm gonna stay on with y'all to just to go over a few more things. But I want to start this video right here because I feel like I said a lot. So this is just for whoever watches this video to stop right here to practice and review this video as many times as you need to kind of like move forward with your trading and understanding how this structure will work. So let me